Hello traders, this is Ala Peters. It is 9:30 on January 22nd. Here is S&P daily chart reminding you once again the importance of reversal zone, where a bullish rally on S&P started first week in December and second week in January. If you know Alpha Wave Trader method, that's a picture perfect reminder how essential and crucial these levels are. On that note, I would like to remind you where S&P hourly chart is, as in our day trading room I demonstrate the method on smaller time frames, where hourly chart is a guiding light. So, S&P yesterday at the close of the room respected this level, and this is the end of the minor trend on S&P. And this is where S&P struggled immensely all the way into market close, finally blasted through in overnight session, and here we go. Selling pressure at decision point 2. And this is where it's going to get interesting when price will start heading into reversal zone. Remember what happened on daily when price came to these levels? So, our bias will start becoming very, very bearish when S&P will come to reversal zone. It will do two things: either bearish correction or bearish reversal. That's simple. Exact same thing you witnessed happen on daily, where a buyer stepped in. Exact same thing will happen on hourly. In this area, we will start monitoring for selling pressure. And if rules are met, we will take short. And if rules are not met, we will ignore corrections. But first things are first. 2044 remains key level. We know extremely well not to buy into it. Bias at 2044 remains bearish. Do not ever enter into it. As we discussed in our education course early this morning, this was the last buying opportunity on S&P. Respect levels dearly, as these are crucial support and resistance levels, as well as target levels. Formula remains the same. It doesn't matter if it's S&P hourly, monthly, weekly, 30 volume chart, and that's a reminder. As we speak, selling pressure is in, and that will remain the focus of each and every trade. Love, love, love. How God reminding you, nothing in this world is random. No Fibonacci levels. And here is an example of what happened on oil. Oil came to the end of the minor trend and staged serious selling pressure. Currently, we're monitoring for counter trend bullish push to the upside. It is only counter trend structure. The fight between the trends is in. Both trends are currently minor. Buyers and sellers are equal. Both trends are minor. But buyers' bias in these levels is absolutely bearish, is absolutely bullish, as bearish trend is taking a major pause. Selling pressure from this level. And again, love, love, love what S&P just reminded you. Don't ever buy into Fibonacci levels. And again, oil daily also reminded you, buyers are not powerful enough. They're trying to break through the end of the minor trend, because monthly levels first time since 2011 had been reached. But they're not powerful enough when it comes to larger time frames. It is only a correction. We don't have any bullish reversal yet. So, oil news is today. It's always very, very exciting day, reminding you that price will override everything. Just like last week. News on oil was extremely bearish. We were buying oil, and oil flew 500, 600 ticks. Each and every day, buyers continue picking up the steam. Today, this moment, every moment I'm looking on oil, the conflict continue playing out between the trends. We have to be extremely carefully as fight between both trends that remain minor in play. and selling pressure on S&P, as spelled out few minutes prior, continues, reminding you S&P respects decision point 2 like no other instrument. This is extremely crucial what will play out in the next 15-20 minutes on S&P. If S&P is not finding buyers, this is the inception of the bearish trend. So buckle up. Reminder is in live markets as we speak. S&P already collapsed 10 points. That's a reminder. If you know Fibonacci levels, you know what not to enter into. You know where to monitor for reversals. Just don't ever forget. Don't acquire a position into Fibonacci level at the market open. That's a reminder. We never trade market open on S&P.